Lithium Americas. They had some news today that the government is looking to get into it. So the Department of Defense has already given them a grant worth millions of dollars. And the Department of Energy has a conditional loan worth over $2 billion with a B into Lithium Americas. And the Trump administration today has said that they're looking to renegotiate that loan. They want to renegotiate that loan to get them into an equity stake into this company, almost to the 10% mark, less than 10%. Because if you go over 10%, there's a whole different set of rules you got to follow set by the SEC. But it still would be a big equity stake. So then if Lithium Americas does really well, then the government does well. And so Lithium Americas, LAC, publicly traded company, I think they're based in Canada, but they are looking to operate in Nevada. And so you can see this past week, okay, our volume is in the hundreds of thousands, sometimes over 1 million. Then there's a jump in price. Whoa, tens of millions looking into it. Huge jump there. So past month, past 3 months, year to date, past year. Let's go back to today. So lots of volume activity. The price jumped. And you see Robinhood has this little kind of like a caution label at the top. This stock has recently experienced elevated volatility. Okay, what does that mean? So it looks back to the past, and if there's a huge price jump or fall, it'll put a little warning label on here telling you, hey, it's elevated volatility. And you can read through that. What's important is that if a stock's most recent daily return lies 6 standard deviations outside of its historical performance, higher or lower, then it has experienced elevated volatility, according to Robinhood's math they do. So 6 standard deviations is huge. In statistics, 1 standard deviation away from the middle of whatever you're looking at, say like a middle of the price. If it's 1 standard deviation away, it's like, okay, this is normal. 2 standard deviations, getting a little, still pretty normal. 3 standard deviations, oh, this is a big movement. 6 standard deviations is huge in statistics. So what we know about volatility is the more volatile something, the more chance of profit on options. You can see here, they operate on the Thacker Pass project that is in northern Nevada. They, a very new company. They haven't sold a pound of lithium yet, but they are digging into clay lithium deposits. I think they're like the first commercially player in the world to do that. However, it is harder to extract lithium from clay compared to other established methods. They are still under construction, but they do have a lot of money behind them to get this done. Obviously, lithium is used in batteries for electric cars, as well as a lot of other things. A lot of batteries run on lithium. So if you click on trade options, you can start to build a strategy for this. And I did try to put in some options on this, and I'll just go back to home, just to show you. Yeah, Lithium Americas. I tried to put in 5 credit spreads. It wasn't filled because I put them in at 15 cents. 20 cents was the high. 10 cents was the low. It probably would have been filled if I put it at 10 cents. I put them at 50 cents and no one bought. But that's okay. Let's see, what did I try to do? Limit price 15 cents, good for the day. 5 of them for a $5 put buy to open and a $5.50 put sell to open, but no one bought it. But it has elevated volatility, so there is a chance for you to make some monies on these options.